3 years ago, I sat in front of my laptop at 11 o'clock p.m., staring at a buy button. I had just opened my brokerage account. I had 500 sitting there, and I couldn't pull the trigger. Here's the thing. It wasn't fear of losing money. It was something worse. I was trying to time the market. I kept thinking, what if I buy today and the market drops tomorrow? I'll feel like an idiot. Sound familiar? What I didn't know then, what nobody told me, is that there's a way to invest where you never have to think about timing. Never have to stare at charts. Never have to ask yourself, is now a good time? It's called dollar cost averaging. And it's the single most boring, most powerful investing strategy there is. Let's break this down. Dollar cost averaging, DCA, just means investing the same amount of money on a regular schedule. Every week, every month, same dollar amount. No matter what the market is doing, market's up, you buy. Market's down, you buy. Market's crashing and everyone's panicking, you buy. That's it. That's the whole strategy. Here's why it works. When the market drops, your same $100 buys more shares. When the market's high, your $100 buys fewer shares. Over time, your average price per share ends up being lower than the average market price. Not theory, math. Here's a real example. Say you invest $100 every month for 3 months. Month 1, the ETF is $50 a share. You buy 2 shares. Month 2, market drops. ETF is $25. Your same $100 buys 4 shares. Month 3, ETF goes back up to 40. You buy 2.5 shares. You've invested $300 total. You own 8.5 shares. Your average cost is $35.29 per share. But the average market price over those 3 months? 33. You came out ahead, not because you're a genius, but because you followed the system. Now, here's where most people get this wrong. They think dollar cost averaging is about maximizing returns. It's not. DCA is about removing the one thing that destroys most investors: emotion. When the market drops 20%, your brain screams, sell. DCA says, buy more, it's cheaper. When the market hits all-time highs, your brain says, wait for a dip. DCA says, buy anyway. It automates the hardest part of investing, doing nothing when you want to panic. So, how do you actually build this? Here's the simplest portfolio you can build. 2 funds, that's it. Fund 1, a total U.S. stock market ETF. VTI, or the Fidelity equivalent, FSKX, this owns basically every U.S. company. Fund 2, a total international stock market ETF, VXUS. This covers the rest of the world. That's your whole portfolio, the entire global stock market in 2 funds. What about percentages? If you want dead simple, go 70% US, 30% international. If you want to keep it even simpler, and some very smart investors do, go 100% into a total world ETF, like VT. 1 fund, entire world. Done. Here's the thing. The exact percentages matter way less than you think. What matters is that you start and that you stay consistent. Now here's how you actually set it up. Right now, go to your brokerage app. Find the automatic investing or recurring investment section. Set it to pull money on payday, the same day your paycheck hits. Pick your amount, $50 a week, $200 a month, whatever you can afford without thinking about it. Pick your fund. VT, VTI, or whatever you chose. Set the frequency, click confirm. That's it. You're now dollar cost averaging. The money moves automatically. You never see the cash. You never have to decide. The system does the work while you go live your life. Not theory. This is exactly how I invest my own money. Every month. Same amount, same funds. I haven't changed the setup in 3 years. There's one rule you have to follow. 1. Do not touch it when the market drops. The market will drop. Maybe next month, maybe next year. It always does. And when it happens, every headline will scream crisis. Every person in your life will talk about pulling their money out. Ignore all of them. Your only job during a market crash is to keep buying, because that's when your money buys the most shares. That's when dollar cost averaging does its best work. The wealth builders are the boring investors. Set it, automate it, leave it alone. Here's a quick checklist. Screenshot this. Open brokerage account. Done in video 1, pick 1-2 index funds, VTI plus VXUS, or just VT. Decide your split. 70-30, 100% world, whatever. Set auto invest on payday. Delete the app alerts. Go live your life. Next week, video 3. We're going deeper. Building your full portfolio. Bonds, rebalancing, and how to actually think about risk. If this gave you a clear starting point, hit subscribe. Practical investing for people who want to build real wealth without staring at stock charts all day. New videos every week. We'll see you there.